something big is happening in the world of investing. The old way of doing things, watching stock tickers and waiting for quarterly reports, is getting bulldozed by a new generation of investors who trade on their phones and get advice from TikTok. This new wave is a two-headed monster: Millennials and Gen Z. Millennials, who grew up watching the 2008 financial crisis unfold, don't trust the old system. So they're making their own rules for getting rich. Then there's Gen Z, the true digital natives. They're jumping into the market even earlier than millennials, using micro-investing apps and thinking about money in a completely different way. They aren't just playing the game. They're changing the entire rulebook. Together, they're a powerful new force, making up over a third of all investors in the US. Their radically different ideas about money are sparking a generational showdown over the future of finance. The only question is, whose strategy is going to win? Get this. Recent studies show Gen Z is investing earlier than any generation in history, many before they even turn 19. But their portfolios are packed with wild assets like crypto and AI stocks. Are they on a rocket ship to becoming millionaires, or are they about to crash and burn? In this video, we're putting Gen Z and millennial investors head to head. We're going to break down their portfolios, their strategies, and their mindsets to find out who is really winning the money game. The Great Portfolio Divide. The first place you see the insane difference between these two generations is in their portfolios. A baby boomer's portfolio is pretty predictable, mostly stocks and bonds. For millennials and Gen Z, that's ancient history. A huge 72% of millennial and Gen Z investors are convinced that just owning stocks and bonds won't be enough to get above-average returns. This isn't just a hunch, it's the core of their entire strategy. While older investors might put about 75% of their money in stocks and bonds, a Bank of America study found that younger investors are putting way less, with alternative investments and crypto making up nearly a third of their portfolios. So, where's the rest of their cash going? Into the wild world of alternatives. We're talking private equity, real estate, collectibles, art, and the big one, cryptocurrency. Affluent young investors are rapidly increasing how much money they pour into these alternatives. This isn't just about chasing insane returns. It's about a deep-seated belief that the old way of building wealth is broken, and that the 21st century requires a new playbook. They want diversification you can't find on the stock market, and it's forcing the entire financial world to pay attention. The crypto heavyweights. Okay, let's zoom in on the craziest part of this portfolio divide: cryptocurrency. For both millennials and Gen Z, crypto isn't just some weird fringe asset. For a lot of them, it's a foundation of their financial plan. In a 2025 Motley Fool survey, crypto was the second most common investment for both generations, right behind individual stocks. For Gen X and baby boomers, that spot was held by boring old mutual funds. The numbers here are mind-blowing. According to a 2025 YouGov survey, 42% of Gen Z investors own cryptocurrency. Now, compare that to the mere 11% who have a retirement account. Let that sink in. Gen Z is nearly 4 times more likely to own crypto than a traditional retirement plan. Millennials are right there with them, with 36% owning crypto. This crypto obsession is fueled by a belief in decentralization, a love of technology, and a deep desire for assets that aren't controlled by the same banks that failed their parents in 2008. A World Economic Forum report even pointed out that many younger investors say cryptocurrencies are easier to understand than traditional products like mutual funds or bonds. This completely flips what older generations have always believed. The crypto gamble is easily the single biggest bet these young investors are making. Risk tolerance, fearless, or financially reckless? This all-in approach to volatile stuff like crypto brings up one huge question. Are these younger investors just reckless? Well, the data says it's a bit more complicated. During the insane market swings of the pandemic, a 2020 E-Trade survey found that 51% of Gen Z and millennial investors actually increased how much risk they were willing to take, a number 23 points higher than the general population. This shows they see a market crash as a massive buying opportunity. On days when the market drops more than 1%, ETF trades by Millennials and Gen Z have been shown to jump by over 40%. They are buying the dip. But here's where it gets interesting. Millennials, scarred by the 2008 crisis, have learned to be scrappy and adaptable. Gen Z, on the other hand, is a strange mix. They seem fearless with digital money, but are often more conservative in other parts of their financial lives because they're stressed about student loans and the insane cost of living. And Gen Z has a secret weapon for managing risk: artificial intelligence. A 2025 study from MXC Research revealed a stunning stat. 67% of young crypto traders aged 18 to 27 are using AI-powered bots to help guide their trades. They use AI to automatically make trades based on rules they set, which helps take the emotion out of the high-stakes crypto game. This is a huge change from millennials, who are more likely to stick to traditional charts. Gen Z isn't just taking huge risks. They're using next-level tech to manage them. The source of knowledge: fin-fluencers versus financial advisors. So where are all these crazy new ideas coming from? Not from some guy in a suit. The way these generations get their financial news is another massive difference. Both generations are digital first, preferring fintech apps and robo-advisors over stuffy old financial advisors. Less than a third of Gen Z investors, for example, even work with a human advisor. Their financial universe exists online. Social media is their Wall Street. Some studies show that over half of Gen Z investors use social media for financial information. They're turning to YouTube, Reddit, and especially TikTok, where fin-fluencers have massive power. One 2025 survey found that 53% of Gen Z investors believe fin-fluencers are more important to their decisions than traditional financial news. This world of peer-to-peer advice creates a super fast-paced, trend-driven environment. It lets new ideas spread like wildfire, but it also opens the door to scams and the fear of missing out, or FOMO, which half of Gen Z investors admit has pushed them to make a bad decision. While they love how accessible the information is, it's a double-edged sword that could make or break them. A shared value: investing with a conscience. For all their differences, there is one powerful idea that brings Gen Z and millennial investors together. They are committed to sustainable and ethical investing. And this isn't just some small preference, it's a core part of how they think about money. An overwhelming majority of these younger investors want their money to do more than just make more money. They want it to do good. Research from Morgan Stanley in 2025 found that 99% of Gen Z and 97% of millennial investors are interested in sustainable investing. And they put their money where their mouth is. Another study showed that nearly 3/4 of them demand that their portfolios include companies that meet ESG, environmental, social, and governance criteria. They actively invest in companies that care about things like climate change and social justice, and they are not afraid to dump companies that don't. This has been a massive wake-up call for corporations everywhere, especially with trillions of dollars about to be passed down to these generations. Companies that ignore ESG are taking a huge risk, because for this new generation of investors, it's not just a preference, it's a demand. So after breaking it all down, who's winning this generational investment war? The truth is, it's not that simple. Gen Z is playing a high-stakes game. They're starting earlier than anyone in history, using technology in ways we've never seen, and could get insanely rich from the power of compounding. But because they're so heavily invested in volatile assets and getting their advice from social media, they could also lose everything if the market turns. Millennials, shaped by the fire of the 2008 crash, are a bit more cautious. They're blending old-school strategies with a big dose of new-school assets. They are the bridge between the old financial world and the new one, but they're often held back by huge student debt and the rising cost of just being alive. Ultimately, we won't know the winner for years. We have to see how these completely different strategies play out in the long run. Will Gen Z's crypto-heavy, AI-powered portfolios crush the more balanced approach of millennials? Or will a huge market crash prove that caution was the smarter play? Only time will tell. But one thing is certain: these two generations have taken over the financial world, and the rules of investing will never be the same. Now we want to hear from you. Which generation's strategy do you think will win in the long run? Are you Team Gen Z going all in on crypto and tech? Or are you Team Millennial playing it a little safer with a more balanced portfolio? Let us know what you think and what your strategy is in the comments below. And if you like this video and want to stay ahead of all the biggest money trends, make sure you smash that subscribe button and ring the notification bell so you don't miss what's next.
Stack it up real high. Come here to be in the know. Come here, enjoy the show. 'Cause it's Warren's money time.